Hello, I'm Peter Towers, Managing Director of ESS BizTools. Welcome to this webinar today. Do financial accounts add value? I hope you're having a great day wherever you are located around Australia. And for those of you who had registered for our webinar yesterday, my apologies for the delay and postponement until today. I got called out of town on an urgent consultancy matter yesterday, so I do apologize to you. I know some of you couldn't join us today, and you are going to be watching this webinar from the recording. If you have any questions subsequently that you'd like to ask me, please send me an email, peter@essbiztools.com.au, or telephone me on 1800 232 088. For those of you who are participating in the webinar today, if you have any questions, can you please type them in, and I will answer the questions later in the webinar. And I'd also like to welcome the people who are watching us live on Facebook. I hope you're receiving us loud and clear. And if you have any questions, you can't log on online, but you can put a message on the Facebook page if you like, or alternatively send me an email, peter@essbiztools.com.au. Are financial accounts helping your clients? After all, that's why we're in business, isn't it? As accountants and advisors, to be helping our clients. So are your financial accounts that you're preparing for your clients, whether they're small businesses or medium-sized enterprises, are they helping your clients manage their businesses? Are they helping to add value to your clients' activities? Do they know where they're going? Do they know where their problems are? If they've got problems, and presumably they'll have some. Or are they just being prepared for the taxation office? Now, I hope you've answered that no, but unfortunately, I suspect that traditionally many accountancy firms have produced financial accounts without any real thought as to how your client might be going to use them to better manage their business. And that's the theme of what I want to discuss with you today. Because what we're looking at in this series of webinars is how can accountants perform services that will add value, and therefore hopefully your clients will be happier about paying more than a standard fee. And a lot of this came out of some discussions on Accountants Daily website about 6 weeks ago, whereby a couple of accountants had raised comments about the problems they were having with clients in being paid over $5,000. And the general consensus seems to be that if an accountant is only providing compliance services, they can't expect to be paid a premium for their services. You might disagree, and I look forward to hearing your views. So my question to you is there a report for each activity that is being conducted for your clients? And basically what I'm looking at is a profit and loss account or a trading account for each department or activity. So if you've got a client that's got 10 different activities, I think you should be preparing 10 separate trading accounts so that the client is able to really zero in on the actual performance of individual components. Not everything combined in one overall profit and loss account. With sales dissected into sales of labor and sales of material, if you're in a contracting type business, or whatever other dissection gives some meaningful information to the client. If you're advising a client on a motel operation, you would have a separate set of accounts for the accommodation, and then for the restaurant, But you might have some other activities within that business. They might be running a tour operation, or they might have some other activities that are being conducted. To get meaningful information that management can then use to run the business, I think you need to be very conscious of giving clients individual results for each of those activities. I think cost of goods sold should be dissected a little bit more than what it is in some accounts. Obviously, there's materials. I personally believe that labour should be allocated into the trading account and then reflected in the gross profit calculation. Now, I know that's not always done, and I'm talking about direct labour, not overhead labour, management labour, office staff, but the people who are working on the tools or are generating the revenue in a trade type business, I think should be charged to the profit and loss account for that individual operation. And also labour on costs. I think it's important that you are giving the client the opportunity of making sure revenue is matched with expenditure. And if someone's taken their 4 weeks annual leave and it's been paid out in one lump sum and it's just coming through in that month's results, that's distorting that month's results. That's why bigger companies have this concept of the provision for labour on costs, whereby an amount is charged each week of the year to cover holiday pay loading, personal leave, statutory holidays, and provision for long service leave, so that that cost is spread throughout the year, so that the cost of when someone has gone on holidays is not used as an excuse by the line manager as to what went wrong in that week's activity. Sure, if that was the cause of it, and it has been charged against that person's results for that week, that explains it. But I found over the years that at times someone having gone on holidays and the cost of the holiday pay has been charged to that month's results is not the full answer as to what was wrong in that month. It's just used as a bit of an excuse. So if you're using the concept of labour on costs, I think it overcomes that issue. And other direct costs, if there is some items that have been directly purchased for a particular activity, sure, they should be charged to it. Now, you could argue that some of those items might go below the line, so we get gross profit and then deduct special advertising or promotion expenditure. That's okay. I'm just wanting to try to convince you today that as an accounting advisor performing a virtual chief financial officer service, because that's what I would urge you to be viewing your role as, I think you need to be trying to give your clients as much dissection on their operations as possible, and therefore put it into individual trading accounts. And then you're able to calculate the gross profit for each individual business or activity or department that your client has in their business. So if we had a situation like this, and this is what I saw recently when I was asked to evaluate the financial performance of a business. Income of around $3.2 million just shown as one income line. Now, this business we worked out, I think, ended up with about 12 separate departments or activities. Now, sure, they had a fairly significant main one, but they had these other activities. And what worries me lots of times, if it's all put in one account, no one really knows who's causing the problem. And there was a problem in this business, as you're going to see as I work through this. We then had opening stock and purchases, freight and some subtotal of 1.41 million. We took off the closing stock and we got a gross profit, which really didn't mean much. There was no calculation of the gross profit percentage on what had been sent back to the client. They did not really appreciate the importance of comparing gross profit percentage from one period to another. But when we started talking about their departments, the client literally shrugged his shoulders and said, well, it's not going to mean much in any case, is it? Because I want to know how I've gone overall on these individual results. And then we had overhead expenses of about $1.9 million, which included labour. A substantial amount of that was labour. And we had a net loss of $43,000. What do you think the client said to me? How's my business going? What's caused the loss? How would you explain that set of financial results, and that's all that the client got, and that's all that their system was disclosing? How would you explain their performance? He told me that their accountant told him to make more sales. But then we discussed sales in which activities? Who was causing the problem? Now, over the years, I've gone into analyse quite a number of businesses that were getting a bit bigger and have found some very bad results, in some cases caused by the main operation. But it's all getting muddied by being included in one P&L account. I think it really highlights the need for individual financial results so that the CEO or owner of the business can sit down with the individual managers or supervisors or leading hands, whatever you want to call them, who are responsible for a department or activity within a business. And some of them might only have one person. Of course, well, that's all right. You sit down and talk to that person. But others have got 2 or 3 people who are working as a little unit. Well, why not give them some feedback? Give them the results. Give them their key performance indicators so they can really see how they're performing, how they can improve. Because if you don't give them feedback, they won't improve. So I think what your client needs is individual profit and loss accounts. I was involved in a public company. I was the chief financial officer and company secretary of a listed public company. We had operations right down the east coast of Australia, from Cairns to Melbourne. And we had hundreds of individual business activities. And each week, for each of those hundreds of activities, a weekly profit and loss estimate was prepared, which was ultimately consolidated through to the CEO of the business. And each month, individual profit and loss accounts were prepared for each of those business activities. I've talked to managers of Woolworths stores about how they perform, and one guy told me he had 43 departments, and he knows by Monday afternoon each week what the trading results were for the previous week, and then at the end of the month he gets monthly financial accounts back on each of these 43 departments that he can then sit down and talk to each of his 43 managers and discuss their results and look at their key performance indicators. In this business climate that we're now in, I think most of your clients need that service as well. Now, I'm not suggesting they're all going to agree to pay you for it, but I am suggesting that you should be having that conversation with them and showing them what you could produce and how you could help them run a better business. So that if you're undertaking the preparation of the accounts the way I'm suggesting, you could then have key performance indicators for each of these departments or activities within the business. And then some meaningful calculations, very meaningful when they're compared one month to the next. And going back to look at what the budget was or how we went 3 months ago for things like the materials percentage to income. What is it? On its own, it probably doesn't mean much, but it starts to mean something if it can be tracked. So if one month it was 60%, and then this month it's only 20%, and then it jumps to 90%, you start asking, well, what was going on? And it might have meant that there wasn't much material recovery in a particular month. If there's an answer, that's okay. It's when there's no answer that your investigative skills come to the fore in helping your client understand what's happened. What's the labour percentage of income? Now, that is a figure that should be fairly consistent. Is it? How does it look? What's the income per employee in this department? That's also a very good indicator to see whether everything's been brought to account or whether there's been a woeful performance this month. Maybe there wasn't enough work. Maybe an employee should have been transferred to another section of the business. And that's the sort of question then that the CEO will be asking that individual manager. Didn't you have enough work in that month? If so, why didn't you tell me so I could have transferred someone out? Or alternatively, so we could have contacted a few more of our customers to see whether we could get some work brought in a bit earlier. And what was the gross profit percentage? Now, when you look at all these on an overall basis, that you've just got an income of 3.2 million and those other expenses that I showed you just a moment ago, that doesn't mean anything. The person that's controlling one of the small sections in a business or small departments, he or she's not going to get anything out of that conversation. They're only interested in what they're responsible for. Today, with the technology and the software that's available, this information can be produced. In fact, I would suggest to you it's always been able to be produced. And big companies have been doing it for a long time. I think we need to make sure that our small and medium-sized business clients are able to receive it as well. And the next item I've got there then is benchmarking analysis. Now, benchmarking.com produces reports for over 220 different types of business activities. It covers a lot of your clients. And I would be urging you to be utilizing their data and then extracting the benchmarking information. But that's no use for a business that's lumping everything in one profit and loss account, because it won't mean much. But if you've been able to dissect it into your individual business operations, it starts to mean something. And it means something to your client then, when he can look at what the norm is, or what the average is, or what the best performers are achieving in a particular type of business, and then looks at what's happening in his own business. So how does your client compare? So I believe that the way these trading accounts should be prepared would be total income and have a dissection of the components of income, whether it's sales of labour, sales of materials, or whatever other item comes into the sales account. And then we look at the cost of goods sold with opening stock. And if it is a trade or professional type business that's measuring work in progress, you would have opening work in progress, materials and labour. Note that I've put the labour into that calculation. I've also put labour on costs. And we might also have some other direct costs, freight. And then we're going to deduct, of course, the closing stock and closing WIP. And from that, we're going to be able to calculate the gross profit, and then the gross profit percentage, and those other key performance indicator analysis that I mentioned before. I think consolidated accounts hide problems in financial data because things can be hidden. And no one's got direct accountability. The person that's managing the largest sort of business in the group is probably going to be blaming some of the other so-called smaller activities. When at times I've found that it's been the big business that's really causing the problems. Sometimes because there hasn't been adequate information flowing through the organisation. And when it's all put into one profit and loss account, it's not obvious. So inefficiencies can be difficult to pinpoint. Just like my opening question, I've showed you that this business is losing money. Where's it losing the money? It's very difficult to pinpoint and identify when everything's thrown into the one profit and loss account. I believe if your client has different activities, prepare individual accounts. I think your client will be most appreciative when they realize that you're going to prepare that for them every month, or you're going to set the system up so that they get it each month. So it means something to them. So if you've got a business that owns its own building or is buying its building, put that into a asset account, you know, the building account, and have the building charge rent. Then you will find it's a bit easier to do benchmarking comparisons, because most of the benchmarking comparisons produced by benchmarking.com.au have a rent figure included. So if you've put your own commercial rent, it allows apples to be compared with apples. I believe that if you were the employed internal accountant for your client, this is the way you would have organized the accounting data. I don't think anyone working full-time in a business would be consolidating everything into one profit and loss account. That suits the tax office. Well, that's the way traditionally accountants have provided information to the tax office. But your client deserves to have it divided into the individual components. I indicated before that in my experience with big business, they prepare individual financial accounts for each activity so that they can really manage and drill down into the figures to see what's going on. Why isn't it performing to expectation? So this is the approach that I would recommend that you are taking with your clients. Let's look at budgets. Part of this process will be enhanced if you've prepared budgets for each individual activity or department in the business. So they've got their own budget. So the monthly trading report can then be compared to the budget. It starts to mean something to that line manager or supervisor or leading hand, whichever title you want to give those various people who are in charge of something, some meaningful information. They've been given their own budget, and then they get a report back each month. So then they're able to have some meaningful conversations with their boss, whether it's the CEO or someone else in the management team. So will management accounts add value? Because really that's the theme of why we're having this type of discussion with you. Going back to the articles that appeared in Accountants Daily, I think they will. Management accounts add value because they give your client meaningful, usable information. And if it's prepared monthly, it's pretty fast and up to date. I'm not talking doing this and only giving it to them once a year, 4 months or 5 months after the end of the financial year. That doesn't help your clients run their businesses, and it definitely doesn't add value. And I've alluded to the comments that some accountants have been making in correspondence with Accountants Daily, that they're having difficulties with clients over fees. My suggestion is that you should be having a conversation with your client and clearly identifying the work that you can perform. Unfortunately, because many accountants have only basically prepared annual accounts and tax returns. That's all that many clients believe that accountants can do. I have great debates with small businesses and medium-sized enterprises that I come across in various consulting roles, and when we conduct webinars for businesses who say that their accountant couldn't do what we're now talking about. I think you need to have that conversation with your client and assure them that you can. I really believe that preparing financial accounts in this way and then communicating with your client as to what those results mean, especially when there's significant variations from budget or from the previous month's performance or the expectation, that you put on your virtual CFO hat and communicate to the CEO, the owner, or the general manager of the business, and help them to understand what's happened and hopefully be able to assist them in the development of strategies to overcome these problems. That's adding value. And I believe that you will be able to talk to your client seriously about some realistic fees for the supply of that sort of work. So ESS BizTools can assist you to be able to offer these services. Based on my significant commercial experience, we've prepared a whole range of product packages and other material. Currently, we have 23 product packages. We produce another 3, sometimes 4 packages a year. So they've been prepared to assist you to deliver business improvement services to small businesses and medium-sized enterprises. I really assume that big businesses have already done all this. We're hopeful that this is going to help you to be able to work with your clients as they try to scale their businesses up, go to the next level, and have a lifestyle and a business that they're happy with. So if you want to get more details, I would ask you if you could log on to essbiztools.com.au, and that will give you an overview of the packages that are contained within the ESS BizTools product packages. We also have a separate website which identifies government grants. There's hundreds of them. There was a new one released only last week for manufacturers, for the supply of new plant and equipment for manufacturing businesses. And depending on the size of the purchase, there's a grant of 50%. The purchase is up to $100,000 from $50,000. And there's also a 33% grant for purchases of a higher amount of new plant and equipment. It's worth looking at and then having that conversation with your client. Government grants are a great way for you to identify new services that you can perform for your client, because preparations of business plans or strategic plans, budgets, cash flows, mentoring type services can be covered by a number of government grants, and your client's getting that work done normally for a 50% discount in effect, and you're earning new fees, creating new income streams. And your team are getting some very interesting work to do. To my way of thinking, it's a win-win-win situation. So your investment for our gold package, which costs $2,700 plus GST for the upfront discounted payment, is only $10.38 per working day. You should be able to recover that. No trouble at all if you are proactively supplying the services that are included in our product packages. There's various experts predicting that there's going to be a significant downfall in certain segments of the accounting industry over the next 5 years as more and more of your clients switch to using the software products that are now available. There's going to be a lot of pressure offering these types of services, offering to really be the in-house accountant, but doing it from an external basis, using the technology, conducting Zoom webinars with your clients. It's the way to go. We can help you on that journey to save you spending hundreds of hours in writing your own material to use. So if you need any more information, please send me an email, peter@essbiztools.com.au, or telephone 1-800-232-088. I haven't received any comments on questions. So we've come to the end of this webinar. If you think of some questions later on, please send me an email or telephone me, and I gave you the numbers there before. We will be sending the webinar participants a copy of the PowerPoint slides tomorrow, together with a copy of this recording. If you're watching us on Facebook Live, thank you very much for doing so. If you would like to receive the PowerPoint slides and a copy of the, or link to a copy of the webinar recording, can you please send me an email, peter@essbiztools.com.au, or if not, leave a message for me on Facebook, and I'll arrange for those items to be sent to you, but you'll have to leave your email address, of course, or as I said, you can send me an email and we will get back to you. So good luck with the introduction of a broader range of services to add value to what you're supplying to your clients. Have a great day. Goodbye.